right, welcome back to Two Super Guys Trade Stocks. I'm Vinny.
I'm Dylan.
And Dylan's going to talk to us a little bit about opportunities for making some money off the next government large multi-trillion-dollar bill, which is rumored to be a stimulus, an infrastructure bill. I mean, I'm sorry, a infrastructure bill, not a stimulus.
Yeah, infrastructure
stimulus
bill
for businesses that make products like steel.
Yes, steel's one of them.
All right.
So,
Grandpa Biden.
There's the big talks of an infrastructure bill. There's kind of like, big talks in like every, presidency, because everyone wants to stamp their name on something. Trump, they ended up having like a 1.5. They had like a massive one, and then he didn't approve it. I think it was going to be like 1.5 trillion at some point, and then they vetoed it. Mm-hmm. So he's been campaigning that this is necessary for a long time. So we're thinking that this is going to be a huge one, because there's a lot of there's like 40,000 bridges in America with a poor rating, mm-hmm. Which is not great. So there's been some stuff proposed, and it looks like we can take advantage of the situation here.
Yeah, I think he just met with some energy CEOs this past week. So
yeah.
And then there's been some talk about them splitting into two bills, in order to make the size a little bit more palatable, so they can ensure that they get through Congress a little bit better that way. So they're not trying to shove $4 trillion bill through.
Yeah, exactly.
But, yeah.
So these are the two. This is Washington Post and New York Times. These were recent headlines. Mm-hmm. So White House prepares massive infrastructure bill. Has all these different things in it. That was Washington Post. New York was they're up to 3 trillion. That's what they're talking about. Maybe splitting it up into two different bills, because half of that was just bridges, roads, construction, that kind of stuff, and the other half was stuff that is not like free community college. That's not help the stocks.
Tougher to sell that to the Senate.
Yeah. So why does this matter? This could be the largest infrastructure bill ever passed since who did the highway system? Was it Eisenhower?
Eisenhower, yeah.
Yeah. So that's what the rumor is.
Wow.
And regardless on if you're Republican, Democrat, it doesn't matter, because if it passes, it passes, and you can make money off of it.
Exactly. We're not a politics channel. We're a money-making channel. Exactly.
If it's 10 trillion, horrible idea, way too much money, I'm still going to invest in these companies.
Yeah, exactly. Now you're interested.
Yeah. So Nucor Corporation, and if you watch the swing trades, I've swung X fairly successfully like 3 times now. Mm-hmm. In terms of these are long-term plays. These are not swing plays. Nucor is substantially more healthy than X. Their current PE is 33, or 33 and a half. They're 21.7 billion, 300 million share float. You would like this, Vinny. Their dividends 2%, not bad.
Yeah.
Their debt to equity is 0.5.
Wow, that's fantastic for a steel mill.
I know.
Yeah.
I think X's is like 2 or 3. Yeah, they're very negative. And I don't think they actually have a PE. I can't remember off the top of my head. Also, institutional owns only like 50% of the shares. So they're the largest steel producer. They're not, as old as X, but they're way more financially stable. It's not even close. So,
yeah, they were, I think, the number 1 percentage gainer on the S&P 500 on this past Friday. Nucor.
They were. Yeah, they went up a lot. I think they went up 8%.
Yeah.
Yeah.
Yeah. I mean, reasonable.
Yeah. And could just be, they could double in a year. So that's hence going to build bridges and stuff. You need steel.
Yeah, exactly.
So Nexties, huh?
United Rentals.
Yeah.
Before.
Exactly. They're institutional owned of 97%.
Yeah. So the big money is.
That's where the money is, exactly. So the world's largest heavy equipment rental company, anything from forklift, everything they have. Some of their gains are priced in. So I would only get them on a dip. But their debt's a little bit high, but their PE is also pretty solid, decently low for the sector. Almost all these companies are like 20 to 22 billion market cap. Kind of odd.
Yeah, I think they're up over 100% in the last year, I want to say.
Yeah, it's a little bit unfair because they all took a massive dive from COVID.
Yeah,
So
recently.
because those numbers are right before that they weren't. But
Yeah,
yeah,
the S&P is up, what, 76% for the S&P in the last 12 months. So.
Exactly.
All right, Vulcan.
Vulcan Materials Company. So their debt to equity is also fantastic. They're 0.5. Institution owns 90% of the shares. So a lot of the rumors are that it's going to be roads, highways, bridges. So these guys are going to benefit because these guys are asphalt, concrete, everything that's not fun. But sometimes non-fun companies are the ones that make you the most consistent money.
Yeah, you can get rich on gravel.
Yeah, exactly. They're recommended by like every single thing with a buy rating. So definitely a good call. So this is the exact same play. Institutional owns almost 98%. Debt to equity is even better. Same type of thing as Vulcan, but they also make some chemical products for agriculture and environmental applications. They're not quite as big, but it's they have to go up because to do anything you need the base materials.
Yeah,
and the Martin Mariota materials, Vulcan, and Nucor are basic materials for different applications. So
Caterpillar.
This one's pretty obvious. Can't build anything without the big heavy machinery, right?
Yeah.
So it's essentially them or Deere. I chose them because Deere, they both got hit really hard with COVID, but Deere's debt to equity is 3.26 and has half of the dividend.
Yeah.
So, they're definitely in debt, but you can't build anything without these. So
True.
It should be fairly safe investment.
They've been doing well.
All right. So let's say you don't want to choose. There's something called a PAVE ETF. It is a great infrastructure ETF. Some of the other ETFs have a lot of kind of stuff that does not pertain to this particular bill, like water filtration plants and that kind of stuff, whereas PAVE is mostly building.
Yeah.
So 65% is invested in industrial companies with 21% materials. Vulcan was like one of the number one materials. Actually, it's their 9th largest holding. They have Deere over Cat, but same kind of good stuff. Eaton Corp, I was almost going to put in this, but I decided not to. Trim it down.
Yeah. Interesting. The CSX too, aren't they just getting bought out? Like
I think they might be.
Yeah, I think Union Pacific made an offer for them in the last couple of weeks.
Yeah. Union Pacific was also going to be on mine, but too much.
You gotta move the heavy stuff, right? So trains work better than trucks.
Exactly. And I was, originally I was at like 10 stocks. I'm like, that's too many. It was 20, then 10, then 5. I'm like, all right, 5's better. 5's more palatable.
Yeah, exactly.
So these are ones that didn't quite make the cut, but Brookfield Infrastructure Partners, really, really good dividend, but really in debt, like a lot. And I didn't like how low the institutional ownership was, but they seem to be pretty solid. John Deere should be on here too. You probably won't go wrong with either. Crown Castle International is a REIT. It's a little bit of a different take on the infrastructure. Solid dividend, institutional ownership very high, really high PE. But they should benefit regardless because they own a gross amount of cell towers and internet towers and satellites and stuff. So,
yeah, that's the rumor, is that the broadband for all will be one of the things. So, yeah,
if that's in there, this company's skyrocketing.
Yeah,
so
certainly in position to make some money off that.
Exactly. All right, that's it, dudes.
Yeah.
So these are long plays. Like 12 months minimum.
Yeah, I mean, certainly some opportunity there. Like taking advantage of Uncle Sam's continued spending spree, if you will. Check out Dylan and I's upcoming series about how to invest like a stimulus check. We're going to compete with each other. It should be an interesting one. Speaking of Uncle Sam's benefits.
Exactly. We're going to turn that 1,400 into 0 or 20,000. No way to know.
One of the two. We'll see what happens. Stay tuned.
All right, thank you, guys.
Thank you.